I'll be honest with you, most people completely underestimate what $100 can actually do. It doesn't seem like much, right? It's basically just a night out for dinner, a new pair of sneakers, or maybe a few takeout meals that you won't even remember next week. But here's what I've discovered through years of investing. That same $100, when invested consistently every single month, can quietly grow into something far more significant. And it's not because of luck or some secret strategy. It's because of a powerful force that works behind the scenes every single day. Now, here's the reality I've witnessed over and over again. Most people never actually see this transformation happen. They quit way too early. I've seen it countless times. People start investing, they get excited for the first few months, and then when they don't see massive returns immediately, they just stop. But the ones who stay consistent, they witness something that honestly seems almost magical. And in this video, I want to pull back the curtain and show you exactly what happens when you invest just $100 a month, and how this small decision can completely transform your financial future over 10 years and far beyond. But before I dive into the actual numbers, there's something critical you need to understand. Because this isn't just about how much you invest, it's about how you approach the entire process. And understanding this single difference is what separates people who end up with tens of thousands of dollars from those who end up wondering where all their money disappeared to. You see, I used to believe, like most beginners, that investing was all about picking the perfect stock or catching the next big trend. I'd scroll through social media, see people bragging about 300% gains, and think to myself, if I can just find that one winning stock, I'll be set for life. But here's the truth I've learned through actual experience. Wealth isn't built through excitement or chasing trends. It's built through repetition. It's built through that consistent $100 a month you invest, even when the market's dropping, even when everyone around you is panicking and selling everything. Because every single time you invest consistently, you're taking advantage of something that the wealthiest people on earth use to build their fortunes. It's called compounding. Now, I know you've probably heard this word thrown around before, but very few people actually understand what it means in real, practical terms. So let me break it down for you using a simple story that helped me grasp this concept. Imagine you plant a single seed in your backyard. After a full year passes, it grows into a small tree that produces one fruit. You pick that fruit, eat it, and inside you find another seed. So you plant that seed too. The following year, you now have two trees, and both of them bear fruit. Each one gives you more seeds to plant. And over time, those seeds create more trees, which produce more fruit, which give you more seeds to plant again. That's exactly what compounding does with your money. Every dollar you invest starts generating its own returns, like those seeds. And if you leave them to grow instead of pulling them out, those returns begin to earn their own returns. And here's where things get truly wild. At first, I won't lie to you, it's painfully slow. The growth feels minimal. But somewhere around the halfway mark, something incredible changes. The curve starts turning sharply upward. Growth that once took years now happens in just months. And that's exactly when people start saying things like, "Wow, how did you get so lucky?" When in reality, it wasn't luck at all. It was simply time working its magic. So let me put some actual numbers behind this to make it crystal clear. If you invest just $100 every single month and your money grows at an average return of about 8% per year, which by the way is roughly the long-term historical average of the stock market, after 10 years, you'd have approximately $18,000 in your account. Now, I know that might not sound like a fortune, but here's what's important to remember. You only contributed $12,000 of your own money over those 10 years. The remaining $6,000, that came entirely from your money making money for you. And if you just kept going for another 10 years without stopping, that simple $100 a month habit turns into over $58,000. Keep it up for 30 years and it crosses $149,000. And remember, that's without ever increasing your monthly contribution amount. Just imagine what happens when you slowly raise it as your income grows over the years. Maybe you go from $100 to $150 a month, then to $200, maybe even $300. Suddenly, you're not just saving money anymore, you're actively building real wealth. But here's what I've noticed most people completely miss. It's not actually the returns themselves that make the biggest difference in your final results. It's your consistency over time. Missing just a few years of investing, especially in the early years, can cost you tens of thousands of dollars later on. That's something I learned the hard way. Now, here's where I see most investors going completely wrong. They start investing, but then they watch the market obsessively every single day. They see red numbers and immediately panic, or they see green numbers and start chasing whatever's trending. And before they even realize it, they've turned what should be a calm, automated process into complete emotional chaos. Here's the truth I've discovered. The less you touch your investments, the better your results will be. Because when you invest the same amount every month, regardless of what the market's doing, you're practicing something called dollar cost averaging. It's just a fancy term for saying you buy more shares when prices are low and fewer shares when prices are high. Over time, that naturally balances out your average cost and smooths out your overall returns. And here's the ironic part that always makes me smile. It's the complete opposite of what most beginners actually do. They try to time the market perfectly, buying when everyone else is optimistic and prices are high, and then selling when everyone else is afraid and prices are low. But the investors who consistently win long-term, they do it the boring way, the consistent way, the way that doesn't rely on predictions or market timing. Oh, and they also like and subscribe to this channel to keep learning. Now, let's talk about something even more crucial. What should you actually invest that $100 into? Because this decision is what determines whether your money grows steadily over time or disappears into wild market fluctuations. This is honestly where most beginners get completely stuck. They overthink every decision or read too many conflicting opinions online. And by the time they finally feel ready to start, months or even years have passed, and they've already missed all that valuable compounding time. I know, because I made this exact mistake early on. The truth is, the best place to start isn't some flashy individual stock. It's a broad, low-cost ETF, which stands for Exchange Traded Fund. Think of an ETF like a basket that's filled with hundreds of different companies. When you invest in one ETF, you're buying a small piece of all of them at once. So instead of betting everything on just one company like Tesla or Apple, your money gets spread across the entire market. If one company has a terrible year, the others help balance it out. It's simple, it's stable, and it's built specifically for long-term growth. One of the most popular options is an S&P 500 ETF. It tracks 500 of the largest, most reliable companies in the United States. These are the same companies that have survived wars, recessions, market crashes, pandemics, and everything else in between. Over multiple decades, this index has averaged somewhere between 7 to 10% annual returns. Not every single year, of course. Some years are absolutely brutal, but over the long run, it's been an incredible compounding machine. Let me make this tangible for you with real numbers. If you had invested just $100 a month into an S&P 500 ETF over the last 30 years, you would have roughly $180,000 today. And here's the amazing part. You would have only contributed $36,000 of your own money. That's not magic or some secret formula. That's simply time and patience doing the heavy work for you. And that's the key idea I really want to emphasize here. When you invest $100 a month consistently, you're not just buying stocks or funds, you're buying time. Every single contribution is another brick in your financial foundation, and those bricks keep stacking up year after year while most people are still sitting around waiting for the so-called perfect moment to start. Now, if there's one thing I've observed that separates the investors who actually stick with this for 10 years from those who quit after just 3, it's this simple strategy. They automate everything. They don't rely on willpower or motivation. They don't sit there every month thinking, should I invest today or maybe wait until next week when things look better? They set up an automatic transfer that invests for them on the same day every single month, and then they just forget about it. Because automation completely removes emotion from the equation. You don't get tempted to pause your contributions when the market drops. You don't get overconfident and start making risky moves when it rises. You just stay consistent, month after month. And I can tell you from experience, that consistency compounds far faster than most people think possible. Remember this fundamental truth. Investing is not about timing the market perfectly. It's about time in the market. Even professional investors with decades of experience struggle to predict short-term market movements accurately. But when you zoom out to 10, 20, or 30 years, the picture becomes shockingly clear. The people who stayed invested, who kept adding to their portfolios consistently, and who trusted the process, they are the ones who ended up financially free. And that freedom doesn't just mean having money in the bank. It means having options. It means having real choices in life. It means having breathing room to make decisions based on what you want, not what you're forced to do financially. But let me be completely honest with you. It's not always easy. There will absolutely be moments when your investments drop 10%, 20%, maybe even 30% or more, and you'll feel this overwhelming urge to stop contributing, to pull everything out, to wait until things feel safe again. That's exactly where most people lose the game. Because when you sell or stop investing out of fear, you're not actually avoiding risk, you're locking in your losses. But when you stay calm, keep contributing those monthly investments, and let those lower prices work for you, you're actually buying more shares at a significant discount. And when the market inevitably recovers, as it always has throughout history, your returns multiply even faster than before. Think of it like planting seeds during bad weather. It doesn't look rewarding in the moment. It might even feel foolish. But when the sun comes back out, your garden explodes with growth. That's the mindset that turns an ordinary $100 a month habit into something truly extraordinary. I've learned that the best investors aren't necessarily the smartest people in the room. They're simply the most patient ones. Now let's fast forward 10 years from today. Picture yourself opening your investing app, maybe the exact same one you're using right now, and you see your account balance, $18,000, maybe $22,000, maybe even more, depending on how the market performed, and you realize something profound. It's not just the number that matters most, it's the habit you built along the way. Because that $100 a month habit wasn't just money you invested into the market, it's proof that you stayed consistent, that you didn't wait around for the perfect time that never comes, that you didn't panic and sell everything when things looked bad. You built something invisible but incredibly powerful. You built a new identity. You became the kind of person who invests automatically every month, who lets time do the heavy lifting instead of trying to outsmart the market. And that identity, that's what truly changes your entire future. Because after 10 years of this, you won't just have $18,000 or $20,000 sitting in your account. You'll have unstoppable momentum. You'll understand how the game actually works, and you'll realize that what you accomplished with $100 a month, you can now easily do with $500 or even $1,000 without it feeling difficult or overwhelming. That's when compounding truly explodes in your favor. And it's exactly how small, regular investors transform themselves into financially independent individuals, one boring, consistent month at a time. So if you're sitting there right now thinking, it's only $100, that can't possibly change much, I want you to remember this. It's not about the amount you start with, it's about the direction you're moving in. A decade from today, you'll either look back on this exact moment as the time you finally started building wealth, or as another time you waited and did nothing. And I can tell you from experience, the difference between those two choices could literally be hundreds of thousands of dollars. So here's what I want you to do. Set it up today. Automate your monthly investment and let time work for you instead of against you. Because in 10 years, when everyone else around you is still waiting for that perfect moment that never arrives, you'll already be living the results of your decision today. And if you're ready to take the next step and see exactly where to invest your $100 for the best possible growth, I'd strongly recommend you watch the next video on your screen right now.